All right, today was day two of the post FOMC reaction aftermath. And we had kind of an odd couple that actually did well together. On one hand, small caps continued to move higher despite higher yields and a higher dollar. And on the other hand, semiconductors, which is probably right now the most important industry and the most important sector in the technology sector of the S&P 500, considering the weightings involved there. So that odd couple really led the way higher today as breadth improved. Economic indicators look better. So I'm going to break all that down in today's market outlook preview. Today is Thursday, September 18th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. So back in the day in 2019, the phrase mid-cycle adjustment was used to compare, the just a few cuts in the middle of a bullish cycle, similar to what happened in 1995. That was the phrase du jour, and it actually kind of reemerged a little bit last year, just a little bit. But this year now, the term is risk management. So the Fed is no longer data dependent, but is managing risk, and as a result, that 25 basis point cut had a pretty predictable effect, especially even day two. You can see, look how far bonds fell in day two. Look how much the dollar continued to rise to the upside. Stocks are all pretty flat. The S&P is up 1/3% over the 2 days. International equities are both really flat over the 2 days. The Qs are up, thanks again to semiconductors today. You can see it was flat going into today. And then, but the IWM is not flat. It really took off initially on that. It was up 2%, 2.25% right after the Fed cut rates. It was up actually going into the rate cut, and then now up 2.75, producing its first high since November 21st of 2025. Of course, on the other end of the spectrum, commodities are down. That strong dollar has pushed not only gold down, which is what you'd expect, but it's also pushing commodities down, which is giving us the best case scenario. Rising yields, rising dollar, and falling commodities is a really, really good scenario for equities, and you can see it's having its impact. You also had pretty good economic data from the Philly Fed. The initial jobless claims came back down. That also helped yields. If you take a look at the yield chart here, you can see what I'm talking about. In fact, the market forecast had a really good pattern for the 10-year yield. At the highs of the day, we were above the 17-day moving average, but the MACD and stochastics has crossed over. If you look at the market forecast, it had a pretty good short-term sentiment. Excuse me, had a really good short-term sentiment to the upside. The dollar is also looking pretty bullish too after having been bearish going into this Fed meeting. So a really good move to the upside, but the Russell was the big one. Now here's the thing about the Russell. Look at all these really good moves, really strong moves that the Russell's had. And then after those strong moves, even here with this gap up, you can see that it fails to build on it. Even this last one that we had last week fails to build on it. And that's the concern. As bullish as today was for the small cap index, it's usually when you get these kind of big blow off type moves with breadth increases, that ends up being the peak. And at least even on a 1 day basis, that ends up being the peak. Now, with the expiration, we're just a day away. We might get a little bit higher here, but yeah, that's in the full version of the market outlook video. I kind of break down the implications of small caps leading. I show you a few ratio charts here and there, and what the implication of that is, and do we really want small caps to continue to lead the way higher now that they've finally caught up and gotten its first all-time high in nearly 4 years. One more thing, as I mentioned, the semiconductor sectors and how they performed. You can see technology was one of the only sectors actually did well here, but let's go over the last 2 days, right? We'll go since the FOMC. So technology did very well today, but look at financials. Also doing well. They did well yesterday. Didn't go as much today. Industrials came off of some major lows and had a pretty good run. Discretionary, not so much. So consumer stocks are getting hit, right, with rising yields. But technology, that's the sector we want to lead, and it's leading. And today's trade idea in the full market outlook video, the trade idea actually is a combination of these two sectors. We'll talk about how to trade a little bit of a breakout going on right now in a stock You know, from again, like I said, that dips its toes pretty much in both of those sectors there. So that does it for our market outlook preview. If you want a free version of our blog post, the market outlook blog post, where I go into deep detail into what happened today, all the different factors, how they performed relative to each other, why that matters, what to watch for going forward from here, how to apply it. That's all in today's market outlook blog post. That's free. All you need is a subscription to our site with our basic subscription. Click that link up there above. That will get you there. To the blog post, which again you can just click on and subscribe and be able to see that there. Also, you can get access to our full market outlook video as well as the blog post by clicking on this link. That will subscribe you to our site for our foundation tier, our base level tier, $29 a month. You get access to the full video, the trade idea that we talk about every day in those videos. You also get access to the Market Outlook Live, where we put the trades on in real time, and then the Market Outlook Live trade tracker, where we track the results of all the trades that we do. And in the Market Outlook Live, we also manage existing trades that we still have on, close them out. We talk about why and when and how, which I think obviously is way more important than just telling you a trade idea, right? We also, you know, that's way more important to actually manage that trade from start to finish. So you get all access to all of that with our foundation tier, again, at $29 a month with that link I showed you there before. Thank you very much for watching. Subscribe to our site. Click the thumbs up icon down here. Subscribe to our YouTube channel so you can get these videos day in and day out. Comment on anything that stood out to you. Follow me at DavidSettle42 on Twitter for more content between the videos. You can also follow me on LinkedIn and Facebook. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.